Welcome to Countats. In this lesson, we're going to be looking at the statement of changes in equity. We're going to look at one for a company. In our previous lessons, we've looked at the statement of changes in equity for a sole trader and for a partnership. So if those ones are of interest to you, you'll find them in the links in the description below. But why do we do the statement of changes in equity? What does it show us? Well, the statement shows the changes in the equity of the company during a certain period. So it's usually over a period of 1 year or 12 months, but it will show us the movement or the changes in the equity of the company over that period. For a company, the statement consists of components such as ordinary share capital, retained earnings, share premium. Now, all the elements in the equity of the company will be shown in the statement of changes in equity. So it's not just limited to this. It will be at least two elements, and the most popular ones are the ordinary share capital and retained earnings. But we are going to go through examples on showing you how to complete the statement of changes in equity for a company shortly. The statement shows the movement in the shareholder stake in the business. Now remember, the shareholder stake in the business is shown in the equity section of the statement of financial position, but it's also shown in the statement of changes in equity to see how it has changed or how it has moved from the beginning of the period to the end of the period. Now, what does the format of the statement of changes in equity for a company look like? Well, here it is. The statement of changes in equity for the year ended 28 February and whatever the year may be. And we're assuming in this one here that the year ends on the 28th of February. But it can be any period. If the year ends the 31st of December, then that is what you will put. And it will also include the name of the company. And then we begin with the balance as at the first of the month or as at the beginning of the period. And in this case, we have the 1st of March. And then you have profit for the year that forms part of the statement of changes in equity. Remember, the profit for the year goes to the retained earnings section. And then you have your shares issued if you issued any shares during the period, and shares repurchased. And then you also have dividends declared if you declared any dividends during the period. And then you will have the balance as at the end of the period. Now here we have three elements. We have ordinary shares, share premium, and retained earnings. So these are just examples. You may have only ordinary shares and retained earnings, or these three, or even more than these three. You may also have like a revaluation reserve, and you will see in the examples that we'll go through how we go about doing that. And then here we have highlighted in red, you have your totals for each row that we will have completed. And then here on the bottom right here, the very last thing you have is what the equity of the company is after adding all the elements in the equity of the company. And that is what you're trying to arrive at. What is the value of the shareholder stake in the company? Now let's look at some examples in completing the statement of changes in equity. Here's our first example. We are given the statement of financial position as at the 29th of February 2020, and we are also given additional information. We are told that the profit for the year was 81,242 Rand, and then we are also told that ordinary dividends declared was 20,000 Rand. We are asked to prepare Getter Limited statement of changes in equity for the year ended 29 February 2020. Now, if you have the statement of financial position, we are given here for 2019 and 2020. And if that's what you are given, then you know which section you will be focusing on. And it's the equity section of the statement of financial position. And in this case here, if you can look at our equity section, we have ordinary share capital, we have share premium, and we have retained earnings. So we know definitely in our statement of changes in equity for the company, we will have those three columns, and we will show what the movement are during the year ended 29 February 2020. So here's the format as we had shown earlier. We have the name of the company, Getter Limited, as we had been asked to complete for this company. And then we have here the statement of changes in equity for the year ended 29 February 2020. It's very important also to make sure that you put your heading correctly, and not just for this statement, for any statement that you will be completing. And you can see here, we have put the three elements that we have seen in our statement of financial position: the ordinary shares, the share premium, and the retained earnings. And then we will finally have our total. Now let's go back and complete the balances as at the beginning of the period. Well, here we have 2019 on the right and we have 2020 on the left. We are completing it as at the year ended 29 February 2020. So we want the balances at the beginning of the period. Where will we get that? Well, the balances at the end of the previous period is the same as the balances at the beginning of this period. And remember, we are focusing on the equity section. So for ordinary share capital, we'll look at 2019. For share premium and for retained earnings, we'll also look at 2019. So for ordinary share capital, you can see it's 310. Remember, we're looking at the beginning of the period. That means it's at the end of the year ended 28 February 2019. That will be the opening balances for 2020. So we'll take the 310 and we will put it here as the balance as at the 1st of March 2019, which is the beginning of this financial period, and we put it there under the ordinary shares column. And then the share premium, if we go back, you can see it's 60,000 Rand. So we'll take that and put that here, 60,000 Rand. And then the retained earnings, you can see it's 98,000 Rand, and we'll put that down there. So far, so good. It's easy as that. If you're given the statement of financial position and you're not given any challenging information in your additional information. The next thing that we have to complete is obviously add them together and have our total here on the far right, and I've highlighted in red. So we will take the 310,000 Rand plus the 60,000 Rand plus 98,000 Rand, and it gives us an amount of 468,000 Rand. So we've just added the three together. So what I'm going to do now is complete the ordinary shares column and make sure that I have done everything with regard to that. And then we'll go ahead and do the share premium and the retained earnings. But we'll be doing them as we go ahead. Now, you don't have to complete them in any specific order. You can go row by row, like doing profit for the year, then shares issued, then shares repurchased, or do column by column. It doesn't matter as long as you do the correct thing. Now, let's do our ordinary shares. Remember, profit for the year goes to retained earnings, so we'll skip that one. We'll go to shares issued. Did we issue any shares during this period? Now, if we go back here, you can see that in additional information, we're not told anything about any extra shares that we issued or any additional shares that we issued during the period. However, if we go to our equity section of the statement of financial position, you can see that our ordinary share capital has increased from 310,000 Rand to 375,000 Rand. So if it has increased, that means we issued shares during this period. Now, you could have been told in additional information that you issued shares, and you'll see it in our second example. So we're going to take the 375,000 Rand minus the 310,000 Rand, and we will get what the shares issued or the ordinary shares issued is. And it gives us an amount of 65,000 Rand. 375,000 minus 310,000 gives us 65,000 Rand, and there is our shares issued. And shares repurchased, we're not told anything in our information concerning shares repurchased. We'll put them in brackets if we repurchased any shares. And as you can see here, we have nothing on shares repurchased, so we are fine with that. So we just add the two together, 310,000 Rand plus 65,000 Rand of the shares we issued, and we get 375,000 Rand. That is the balance as at the 29th of February 2020, meaning our closing balance. The next thing we'll look at is our share premium. Now that we're done with our ordinary shares, we're moving to our share premium. Are there any movements in the share premium of the company during this period? Well, let's go back and we can see we are given nothing on share premium in our additional information. But if we go to the equity section of the statement of financial position, if you look at share premium, you can see it moved from 60,000 Rand at the beginning of the period to 73,000 Rand at the end of the period. So 73,000 minus 60,000 gives you 13,000 Rand, and that is our movement in share premium. That will be under the shares issued section. Remember, when you issue shares, that is when you charge a share premium, and that is why it goes to that row. And there was nothing on shares repurchased, and dividend declared, obviously, as I mentioned, goes to retained earnings. So we're just going to add the 60,000 Rand plus 13,000 Rand, and it gives us 73,000 Rand as it is in the statement of financial position at year end. Now we look at the last one, retained earnings. First thing we do there is to put the profit for the year, or the net profit. We'll go back there, and you can see we are told here in additional information. And like I said, you could have been given in the statement of comprehensive income, or you take the net profit and put it in. And in this case here, we are given additional information. We are told that the profit for the year was 81,242 rand. So we're going to put the 81,242 rand as a positive. If it was a net loss or a loss for the year, then you put it as a negative. And then the next thing that we do there is to put the dividends declared. Did we declare any dividends during the year? Well, let's go back, and you can see in additional information, we are told that ordinary dividends declared was 20,000 rand. So we're going to put 20,000 rand as a negative under the dividends declared row, because we're issuing these dividends to our shareholders. That means money is leaving the company's account, or we're using our profits to pay it out. That's why we're putting it as a negative. It's reducing our retained earnings, or the profits that we made during the period. Now we're just going to sum the 398,000 rand plus 81,242 rand minus the 20,000 rand, and it gives us 159,242 rand. Now all we have to do is just to sum up all the rows and put them under the total column. So we're going to do just that, and I've already done that, and you can see it gives us a final figure of 607,242 rand. That is how much the equity of the company is. Now if you go to the equity section of the statement of financial position, it should appear that way. You can see here we have the equity as 607,242 rand. It should tally with this 607,242 rand. It should be the same amount if you are given the statement of financial position as at the year end. And that is the connection between the statement of changes in equity and the statement of financial position. I hope this example has made sense. I hope you are now able to see how we do the statement of changes in equity, and how to slot in all the figures for each element of equity that we have. Let's quickly look at our second example on completing the statement of changes in equity for a company. Here we are told that the following is the equity section of the statement of financial position of Cocoa Limited at the 1st of March 2020. So we have ordinary shares at 2.50 per share. It's 450,000 rand. That is the value of ordinary shares in the company. The share premium value is 75,000 rand, and our retained earnings is 144,000 rand. It's very important that we pay attention to the dates, as I mentioned also earlier. And we are given additional information here. But let's go to the required so that we can work through the information as we complete the question. We are told that we need to prepare the statement of changes in equity for the year ended 28 February 2021. Very important to pay attention to the dates. Remember, we're told that this information that we're given in this table is at the 1st of March 2020, and we are completing the statement of changes in equity for the year ended 28 February 2021. So first thing that we need to pay attention to here is how many elements of equity do we have. Obviously, we have ordinary shares, we have retained earnings, we also have share premium, and we can see that in this table. Now let's look at additional information if we're going to have any additional columns in our statement of changes in equity. We're told here that an additional 20,000 shares were issued for 60,000 rand. Okay, that's not an additional column, that is a row that we will have there as shares issued. And ordinary dividends declared was 35 cents per share on all shares held at 28 February 2021. Okay, so that's dividends that were declared. The profit for the year was 137,000 rand. Okay, that's just the profit. And we're told here that the property, plant and equipment, or PPE of the company were revalued and resulted in a surplus of 45,000 rand. What do we call that? Well, that is a revaluation reserve. Now you can see we don't have any revaluation reserve here on the table or at the 1st of March 2020 or the beginning of the period, but here we are told that the PPE of the company was revalued and it resulted in a surplus of 45,000 rand. So we're going to have another column for revaluation reserve. Now when you have an instance like that, now you know that you have to add an additional column. And here is our table. We have done that we have ordinary shares, we have share premium, and we have retained earnings, and we're given additional information, so we know that we also have revaluation reserve. And like I said earlier on, the elements of the equity are the ones which will appear in the statement of changes in equity. So you make sure that you put everything that you need to put in here. And we have put our dates balance as at the 1st of March 2020, and at the end we will want to see the balance as at the end of February 2021, as that's what we were asked to do. Now you can see here we have profit for the year as we had for the first example. Revaluation surplus is what we've added because we know we have revaluation surplus here, and the rest of the things are exactly as it was in the first example. And you can see here the heading, we have the name of the company, Coco Limited, and we have the name of the statement of changes in equity for the year ended 28 February 2021. Now let's go ahead and complete it. Now in this time we're going to do it row by row. So the first thing that we need to do is to put our balances at the beginning of the period, i.e. on the 1st of March 2020. So what do we have? We're told that the following is the equity section of the statement of financial position of Coco Limited at the 1st of March 2020. So we have ordinary shares, and the amount there is 450,000 rand. So we're going to put 450,000 rand as the opening balance for ordinary shares. And for share premium, we are given here 75,000 rand. So we're going to put that 75,000 rand. And then the retained earnings were given there 144,000 rand, so we put the 144,000 rand. And for the revaluation reserve, remember, we were not given anything for revaluation reserve at the beginning of the period. We're only told that it occurred during the period. So as you can see here, we have no revaluation reserve at the beginning of the period. The only thing we are told here is that the property, plant and equipment of the company were revalued and resulted in a surplus. So we're going to have 0 for revaluation reserve. And the next thing that we need to do is add all that we have on the rows at the beginning of the period, and it gives us an amount of 669,000 rand. That shows us that at the beginning of this period, the equity of the company was 669,000 rand. Now the next thing that we'll look at is the profit for the year, and that we were also given in additional information. You'll usually be given, or you'll be given the statement of comprehensive income as I had mentioned earlier. So we'll go back here, and you can see here we are told that the profit for the year was 137,000 rand. So we're just going to plug in that 137,000 rand under retained earnings. Don't make a mistake when putting it somewhere else under revaluation surplus or elsewhere. You'd be incorrect. And that's the only item we have in that row for the profit for the year. So we're going to put it under total 137,000 rand. The next thing that we have here is the revaluation surplus. And we know it's a surplus, remember that, because we were told that it resulted in a surplus of 45,000 rand. So since the assets, or the non-current assets, that being the property, plant and equipment of the company, was revalued and resulted in the surplus, we'll put the 45,000 rand as a positive. So we'll put the 45,000 rand under revaluation reserve, don't forget that. And then we'll put that under total since we have no other item in that row. So we'll put 45,000 rand. The next thing that we look at is the shares issued. Now let's see what we issued here. If we issued any shares, we're told here an additional 20,000 shares were issued for 60,000 rand on the 31st of July 2020. Now that is during this financial period, so we need to take that into account. But it's not clear cut as just putting the 60,000 rand. Well, we need to figure out if there is a share premium on this issue of shares. Now, if you see here the information we're given as at the beginning of the period, ordinary shares at 250 per share. What is that 250? That 250 is the par value, or the face value of the share. Now, if we issued the shares at anything above the 250, that will be our share premium. Okay, I hope it's made sense. Now, what we need to do, the first thing that we need to make sure is that we find out how much did we issue these shares for. And I'm talking about the amount per share. Okay, At what rate did we issue these shares? Well, we're going to take the 60,000 rand because that's the total amount we received for issuing the 20,000 shares, and then we divide that by 20,000. So it's 60,000 divided by 20,000, and you will see that it's 3 rand per share. So the issue price per share is 3 rand. That means that we issued it at a higher price than what our par value is. So our ordinary shares, what is going to go under the ordinary share column, is going to be the 250 times the 20,000 shares. That is the issued ordinary share value, and gives us an amount of 50,000 rand. The next thing that we need to take into account is the share premium. Remember, we issued these shares at a price higher than the par value of 250. So what is that value? It's the 3 rand minus the 250. It gives us 50 cents, and we multiply that 50 cents by the 20,000 shares, and it will show us what our share premium was. And here we go. The share premium is the 3 rand and the price or the rate at which we issued the shares minus the 250, which is our par value, and then we multiply that by the number of shares we issued, and it gives us 10,000 rand. So we issued these shares at a premium of 10,000 rand in total. So I hope it's made sense. The first thing that you want to make sure is that you get how much you issued each share for, and then you compare that to your par value, which you'll be given, and in our case it's 250. So we issued it at a higher price than 250. That means we have a share premium. So first of all, you just use your par value times the number of shares you issued, and you will get your ordinary share value, and then you take your amount that you issued the shares for minus your par value amount, which is the 250, and you multiply that by the number of shares you issued, and it will show you how much your premium is. So in a nutshell, you are saying how much did I issue these shares for each, and then you deduct your par value. So you're looking at the difference between the par value and what you issued each share for. So with that being done, we now know that our ordinary share value is 50,000 rand. So we're going to go to our table, and the shares issued is 50,000 rand under the ordinary shares column. Now we go to the share premium column. Now we know we have a share premium because we just calculated it and saw that. So we go back, and you can see that our share premium is the 10,000 rand we've just calculated. So we go to our share premium column and put the 10,000 rand there. And that is all we have for that row. So we just add the 50,000 plus the 10,000, and it gives us the 60,000 rand. And remember, that's the 60,000 rand that we received for issuing the 20,000 shares. And then for the shares repurchased, we know that we didn't repurchase any shares, as we can see here from our additional information. We didn't repurchase any shares from our shareholders, so we're going to leave that one blank. And then, is there anything we are missing here? Yes, the only one we have not done from our information that we are given is the dividends. We are told that the ordinary dividends declared was 35 cents per share on all shares held at 28 February 2021. Very, very important to note that. Remember, when we issue dividends, we are issuing dividends per share. But on which shares are we issuing dividends? Is it on the shares that we had at the beginning? Because at the beginning of the period, obviously we have ordinary shares worth 450,000 rand. But we know that during the period, we issued more shares. That means we have more shares in issue in the company. So we are told that we issued these dividends on all shares held at 28 February 2021. And that is at our year end, meaning that the dividends declared was on all shares that we held, the one that we had at the beginning plus the one that we issued during the period. So we need to figure out how many shares we have in issue, and then we need to multiply that by 35 cents per share to get the total value of dividends that we declared. So the first thing that we need to do is to calculate how many shares we had at the beginning of the period. We know that our ordinary shares have a par value of 250, and at the beginning of the period, it was worth 450,000 rand. So what do? We take the 450,000 rand, divide by 250, and it will tell us how many shares we had at the beginning of the period. And we know that we issued an additional 20,000 shares. So we'll just add the 20,000 shares, and it will give us the total number of shares we have in issue at 28 February 2021, or at the end of the period. So here we go. We have 450,000 rand, which is the amount we are given or the value of the shares we had at the beginning, divide by 250 par value per share, and then we add the 20,000 shares that we issued during the period, and it will give us a total of 200,000 shares. That means in total at 21 February 2021 we have 200,000 shares. I hope it's making sense. We calculated how many shares we had at the beginning of the period, and we add the 20,000 shares we issued during the period. And now that we know how many shares we have in issue at the end of the period, or at 28 February 2021, we take the 200,000 shares and we multiply that by 35 cents to get how much dividends we declared. And here we go, it's the 200,000 shares we have in issue at the end of the period multiplied by 35 cents per share, and we get an amount of 70,000 rand. That means the dividends that we declared were 70,000 rand. So we're going to go to our retained earnings column and put the 70,000 rand in brackets, because we are declaring dividends, meaning it's going to go out of the business account and go to the shareholders because we are giving them these dividends. And obviously the total for that row is 70,000 rand. And we have just completed everything that we needed to complete. We have taken into account all the information that we're given. Now just to put the total for all our columns, the first one is ordinary shares, which is the 450,000 plus 50,000 gives us 500,000 rand. The share premium is the 75,000 plus the 10,000, and it gives us an amount of 85,000 rand. And the retained earnings, you take the 144,000 rand plus 137,000 rand minus the 70,000 rand, and it gives us an amount of 211,000 rand. And our revaluation reserve is the 45,000 rand, which materialized during the period. And then we will have our total, or the total amount of the equity of the business. So you're going to add either what we have here from the top going down or from the left going to the right. It should give you the exact same answer. If it doesn't, you have done something wrong somewhere. So if we add them all, it gives us an amount of 841,000 rand. That means the equity of the business is worth 841,000 rand. So it moved from 669,000 rand at the beginning of the period, and it is now 841,000 rand at the end of the period. I hope it has made sense. I hope you now understand and you know how to do the statement of changes in equity for a company. And if you have gained value from this lesson, please subscribe to our channel, like this video, and share it to those who think it might help. Till next time, cheers.